Welcome to the LFB and our global video charting review. This is for the week commencing the 8th of May 2011. My name's Marco Hay. Hope I find you well. We do ask you that you read the disclaimer posted to the LFB website and above the page that the hit video is housed on, and read and accept that disclaimer before taking any information from the video. We're looking at the dollar index in this review, so we'll look at where the dollar index is sitting technically, look at the fundamental drivers of that dollar index, and just try and connect the dots that have the potential this week to create a big reversal point on dollar index trade. Looking at the 4-hour chart, and we're going back to the early part of April in this move, and we're looking at the leg lower that the dollar made from 76 that got itself down towards the 73 area. If we string a Fibonacci study on that, we've just had a 61% reversal of that move lower that broke the 20-day simple moving average and has got major resistance back up here again at 75. We are in a short trend on the dollar. We do have to understand that probably no other time in history has had such a mix of technical and fundamental drivers of asset classes. Now, the fundamental story changes day to day on most asset class outlooks. The global markets 24 hours of trade really have shrunk the the trading market day, and we do have to understand that it's going to be fundamentals that determine direction. It's going to be technicals that will just tell us the tipping points and the stopping points. This could be an ABC down. Literally, there's the A leg, B leg retraced after the European Central Bank press conference on Thursday, where Jean-Claude Trichet, president of the ECB, called for strong dollar policy to be backed by the US administration. This move was as much about that reaction as anything else. Whilst commodities and equities have been sold, the dollar wasn't going higher. It was only after price decimation in the commodity markets had been in place that the instigator of this move was the ECB press conference. If this is an ABC leg, there's the A leg. The fact that we've retraced that 61% would tell us that these 300 points of movement would be the maximum that we could expect from any move lower in dollar index trade. This is going to be a weak reversal if we do get it, and you wouldn't expect any more than those 300 points or 300 ticks if you trade the actual dollar index commodity in movement lower. The stopping points on the way down are going to be 74.50 and then down towards 73.50, which are back into the channels that were formed over the course of the last drop lower in April and May. This is the euro dollar chart. This is an inverse US dollar look. When the dollar index goes up, euro dollar is invariably going down. The euro makes up 60% weighting within the dollar index, so its impact is very strong. Looking at a 4-hour chart, we do have the 50-day simple moving average sitting down here at the 42.70 area, which is very similar to the setup on the dollar index. We've broken support at the 20-day moving average, which is at the 45.70 area, and conversely, when we looked at the dollar index was moving up through the 20-day moving average as resistance. We do feel that there is a very strong likelihood that we will get back and test the 4600 area from a technical perspective, and that may create an A, B, C leg down in the very near term. But at this point in time, this dramatic move that came after the ECB press conference on Thursday of last week really does look to be contained in its momentum now. We wouldn't expect too much more depreciation in euro without first of all seeing a little technical bounce higher. The Great British Pound against the dollar, we've had some containment in the Great British Pound, same as the dollar index, same as the euro. We're trading around this 20-day simple moving average with the
50 moving average just below, but it's dollar Swiss and dollar yen. Take a look at dollar yen first. We're still in dramatic decline on the dollar against the Japanese yen, and we've got a solid trend line that is holding now from a technical perspective. It's going to be very, very difficult to get back above this 100-day, 20-day, 50-day, and 200-day simple moving average areas, which are at 81.90. If we look at dollar Swiss, again in decline. So all the time that the dollar is losing ground to the Japanese yen and the Swiss franc in general, you'll find it hard for the dollar to gain substantially and in a sustainable format against most of the other major pairs. Dollar yen and dollar CAD are linked to the US Treasury market and interest rates, but unless either of these two pairs show dramatic US dollar strength, the other major pairs are very, very likely to retrace some of the losses against the dollar during the early part of this week. Updates will follow to subscribers. We'll email you directly as the market unfolds with alerts and price momentum, updates and signals that will keep you abreast of the moves that are happening. If you're not a LFB subscriber and you want to take advantage, visit the website www.thelfb-forex.com, and under the services menu you can take a trial period for our subscription services.